The S&P 500 made an all-time high at 7168.59 on Friday. And for this all-time high to build, the S&P 500 took 5 days. However, if you look into the chart of Nasdaq, the Nasdaq was making an all-time high almost every day. And from the recent bottom to the top, the Nasdaq has gained almost 20% and the S&P 500 has gained 13.5%. But the Dow Jones is still lagging behind. In my previous S&P 500 weekly technical analysis, I have mentioned that S&P 500, Nasdaq and the US stock market is now getting heavier, and in this manner there will be very heavy pressure and we will expect profit booking. And on 3 days, Monday 20th of April, Tuesday 21st of April and 23rd of April, Thursday, we have seen some profit booking in the S&P 500. However, the S&P 500 did not lose the 7,000 psychological mark. And this was very much clear from Monday itself when the S&P 500 made intraday high at 7122 and low at 7084, but recovered and closed above the 7,100 at 7109. And on Monday, we knew that S&P 500 won't be able to move up and the bullish side will be limited or restricted to the 712x. But at the same time, the bearish side will be restricted to the 709x level, with heavy probability of the recovery of 7,100 and then closing above the 7,100. However, this little weakness on Monday then triggered some good profit booking on Tuesday on 21st of April, and S&P 500 closed below 7,100 for the first time after 2 consecutive closings above the 7,100. There was not much change on Tuesday because the bullish side was still supposed to be limited to or around 712x, whereas the bearish side was heavy. And it was clear that once there comes an hourly closing below the 7,100, in that case there will be more pressure and the profit booking will happen. So Tuesday was the first day of proper profit booking. However, again it did not lose the 7,000. And there was a wonderful example of pure manipulation, and this happened on Thursday 23rd of April. So what happened initially on Thursday 23rd of April? First, there was a bullish movement. S&P 500 breached the previous all-time high only by a few cents, like 20 cents. Then it came down. Then there was very heavy selling in just 1 hour. Then there was very heavy recovery in another hour. Then in the final hour, S&P 500 closed above the 7,100 psychological mark. However, the good thing is that we knew that what will trigger the sharp and heavy fall, that was the breach of 7102.91. Because if or when S&P 500 breaches the 7102.91, then it will come under sharp selling, very heavy fall. Then 705x will be there. And then finally, on Friday, because of heavy bullish movement in the chip stocks, especially Nvidia, and then heavy bullish movement in Microsoft, the S&P 500 moved up heavily and made a new all-time high and closed above the previous all-time high and opened more bullishness. However, now the Nasdaq and the S&P 500 have reached or have almost reached to the expected all-time high from where we can expect some bearishness. However, this bearishness will remain limited. There will not be any heavy fall until and unless the 7,000 mark is breached. So exactly from where we can expect the S&P 500 and Nasdaq to come down or to show this the heavy bearishness, what will trigger the heavy bearishness or what will trigger more bullishness, and how soon we will be expecting a heavy profit booking. So all of that I am going to discuss in detail in this, the S&P 500 weekly technical analysis, which is for the week of April 27th, means from April 27th, which is Monday, to May 1st, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in 3 parts. The first part is the technical part. In the technical part, I will cover the weekly and the daily chart section. And now S&P 500 is 100% absolute bullish on the weekly and the daily chart, means that long-term and the short-term trends are absolute bullish. Second part is the economic factors like oil, manipulation from the highest level. Okay, we all know that who is manipulating the stock market. Last part is the probable movement. In the probable movement section, I will tell you the condition for the bullish movement, the bearish movement, the levels, the numbers, the zones, And the conditions for the partial profit booking is exactly the same that we have seen in the previous week, and a condition for the sudden and very heavy fall, and a condition for the consolidation. So guys, now I'm going to start with the technical part first. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first part of the agenda of this S&P 500 weekly technical analysis. And this is the technical part. I have divided it into the weekly and the daily chart section. So weekly chart is the long-term picture, okay, the long-term trend. Daily chart is the short-term trend. So first I am going to discuss the weekly chart. This is the weekly chart, and on the weekly chart, one candle means 1 week, not 1 day or 1 hour. One candle means 1 week. Now let's first discuss the candle. If you notice, it's a limited bullish candle. The only thing to consider, okay, from this candle is that this candle has given an all-time high in the S&P 500. That's the only importance of this candle, otherwise nothing. Okay, because there were 1, 2, 3 very heavy bullish candles, then this is a very limited bullish candle. This is indicating that earlier the stock market was running. It was running. The stock market is now getting tired. But this does not mean that the S&P 500 is going to come down, it will fall heavily. This simply means that there is some bullishness. However, this bullishness is not expected to be heavy, because this, the last weekly candle, is a very small limited bullish candle as compared to these 3 very heavy bullish candles. Means earlier it was running and now it is getting tired and it want to take some rest. But because of the ATH condition, on Monday this candle is indicating a gap up open, or irrespective of any open, an initial or intraday bullish movement. Without ATH, only an initial or intraday bullish movement. Okay. Now, this is the candle of the Dow Jones. Dow Jones is giving a proper movement. It was coming down 1, 2, 3, 4, 5. Okay, then 1, 2, 3. In the S&P 500, it was coming down and then very heavy bullish candle breached the all-time high. Then continuously the movement. However, Dow Jones has now not breached the all-time high. It is still holding 1, 2, 3 green candles. Then it was struggling and closed as red. So Dow Jones is giving proper movement. Okay, even though there was some manipulation, but still it is holding and is giving proper movement. Okay, the last candle of the Dow Jones is indicating an initial or intraday bullish, initial or intraday bearish movement on Monday. Okay, no gap up, no gap down, right? However, Nasdaq is in a condition which is more bullish, and because Nasdaq was heavily manipulated, most of the options were bought in the QQQ ETF of Nasdaq and the SPY ETF of S&P 500, okay, to manipulate. So based on this condition of the Nasdaq, again a gap up or irrespective of any open and initial or intraday bullish movement. Now let's analyze the technicals and let's see what the real picture is. In terms of the technicals, S&P 500 is bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart. And also there is a confirmed bullish crossover in the MACD of the S&P 500 on the weekly chart. Also the stochastic RSI is bullish on the weekly chart. There is no saturation, nothing. Okay, S&P 500 is 100% absolute bullish on the weekly chart. If there comes any more bullish movement in the next week, then S&P 500 on the weekly chart is expected to hit the initial saturation through the K channel, that will be 100. This will hit 100 as early as on Monday if it try to move up. Okay, now whether it has actually hit the 100 or it is like 99.9 or 99.8, that I will clear in the first update or even in the pre-market update, pre-market analysis. This is the chart of the Dow Jones. Dow Jones is almost the same. Dow Jones is bullish through the moving averages, bullish through the Ichimoku cloud, bullish through the Bollinger Bands on the weekly chart. Dow Jones is okay. There is a problem because the Dow Jones has not given the MACD of the Dow Jones has not given a bullish crossover and is still trading bearish. Okay, this is something that is going to create a problem to the tech indices, means to the Nasdaq and to the S&P 500. So this means that the Dow Jones here is 80% bullish on the weekly chart and is not 100% bullish. This means that although the market, the S&P 500, Dow Jones and these the indices, they are in the bullish trend, the long-term trend is now almost bullish, okay, but still there is some suspicion based on the MACD of the Dow Jones. But now we will get more clarity through the daily chart, okay, because daily chart technicals indicates the short-term movement. So let's move on to the daily chart. So guys, this is the daily chart. Daily chart means the short-term picture, the short-term movement, okay. And on the daily chart, one candle represents 1 day, not 1 week or 1 hour, okay. Now let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now on the daily chart, first comes the candle. If you notice the candle, it's a normal bullish candle. However, again the same condition, because this candle was involved, or this candle has made an all-time high in the index. That is why a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. So that heavy bullishness is not because there was a green candle. It was because it has breached, sustained and closed above the previous all-time high. Okay, previous all-time high was recently made on Thursday at 7147.78. This is the Dow Jones. This is the last candle of the Dow Jones. A very limited, very small bearish candle, daily bearish candle. Okay, and this candle is simply indicating an initial or intraday bearish movement on Monday. Now this is very similar to what we have seen on the weekly chart. Weekly chart of the Dow Jones was also indicating an initial or intraday bearish movement on Monday. This means that the Dow Jones is under pressure and will remain under pressure, and then we are going to see an initial or intraday bearish movement on Monday. So this means that overall the picture is that the tech indices are indicating an initial or intraday bullish movement, including a gap up open on Monday, whereas the Dow Jones is indicating an initial or intraday bearish movement on Monday. And yes, both of these movements are allowed to happen at the same time. Okay, now I want to show you a pattern. If you notice, this is the S&P 500. Okay, this box is it is showing you a consolidation pattern. Why the consolidation and not the bearishness? The reason is that the S&P 500 did not breach the 7,000 psychological mark. Okay, this was on Thursday. Similarly, on Tuesday, S&P 500 came down, but again it sustained within the 705x range, the level, and it did not come down. So S&P 500 was holding strongly at the 7,100 and is now forming a pattern of the consolidation. However, this pattern is more visible in the Dow Jones. This is the Dow Jones. Okay, although this is the early stage of the consolidation, okay, still there is no 100% confirmation on the consolidation. But if the Dow Jones remains in this condition, okay, then this means the consolidation. So, but for now, okay, let's discuss the technicals and let's see the saturation in the indices, the S&P 500 and in the Dow Jones. So in terms of the technicals, the S&P 500 bullish through the moving averages, Bollinger Bands, and the Dow Jones on the daily chart. The S&P 500 is also bullish through the MACD on the daily chart, and is also, I think it is also bullish through the, it has regained, yes, it has regained the bullishness, okay, through the stochastic RSI. So S&P 500 is bullish through all of the technical indicators, okay, and is saturated and is very near to the overbought levels. Means any more bullishness means overbought, okay, or even a limited fall, a little fall, then also overbought, right? So it is yes, there is heavy divergence in the S&P 500. S&P 500 is 100% absolute bullish on the daily chart, okay. Dow Jones is good. Dow Jones is bullish through the Bollinger Bands, moving averages, Ichimoku cloud on the daily chart, and the Dow Jones is bullish through the MACD but is bearish through the stochastic RSI, okay, and the same divergence. But the Dow Jones is in the overbought condition. So Dow Jones, in this manner, Dow Jones is 80% bullish on the daily chart, okay. Surprisingly, the Dow Jones is also 80% bullish on the weekly chart. So overall, the Dow Jones is 80% bullish. MACD on the weekly chart of the Dow Jones is bearish. Stochastic RSI on the daily chart of the Dow Jones is bearish. So what does all of this mean? That the tech indices are 100% bullish on the daily and the weekly chart, but the Dow Jones is only 80% bullish. Okay, all of this indicates that there is some room in the bull side. That's not a problem. There is some room in the bull side, but that room is very narrow, means very limited. This range is very narrow, very limited. It is allowed, but it is limited. Okay, the S&P 500 is allowed 1%. So maximum range is 1%. For the Nasdaq, it is already in that range. It has already entered in that range. It is already within that range. And the range yesterday I have mentioned in the first update and in the midday update. For the Nasdaq, this was the expected range. For QQQ, its ETF, this was the expected range. So I will discuss all of this range in the next part. That is the probable movement, means the last part of the agenda. So now let's discuss these economic factors and how these economic factors are going to put the pressure or are going to support the bullishness in the stock market. So guys, before I discuss the economic factors, the interest rates, the FOMC meeting, and all of these, the conditions that can either help or break the stock market, I have this important information to share with you, that this is my S&P 500 knowledge transfer program. Through this program, I teach everything from basics to advanced, means whatever I know, whatever I have learned in last many years. Okay, I will discuss each and everything through the program, the basics, the technical indicators in detail, and the hacks and the strategies through the technical indicators, the trading strategies, the market analysis, the options in detail, the options basics to the options advanced, the strategies, the calculator, premium calculator, the live calculations, the option strategies, support and resistance levels, price prediction, means to predict the price even before the stock or the index hit that price. Okay, it is very similar to what I mentioned, that the 1% range or the 1% in the S&P 500. Then the trend analysis, how to analyze the trend, bullish, bearish, and how to avoid falling into the traps, and the stock market hacks with very high accuracy. And these are the snapshots of the recent meetings. And these are the important terms and conditions. And guys, this is my email address. So whenever you want to participate in this program, or if you have any questions, then you can send me an email. And also I have given the link to this, the Google spreadsheet, in the description of the video and also in the comment section. And guys, other than that, if you want to learn the quick hacks only, or the very specific things in just 1 or 2 meetings, for that you can visit the shop section. This is my Patreon page, this is my Patreon profile, and this is the shop section. And when you open the shop section, then you will see that there are the 3 programs, and this is the 8 stock market hacks and the modified technicals with very high accuracy. These are the 4 stock market hacks with very high accuracy. This is the options trading, the basics, the options basics, the options advanced, options strategies, options premium calculator, everything in this program. So these programs are very specific. Okay, whichever program you want to participate into, okay, you can opt for that program directly from here. And I've given the link to the shop section on my Patreon page in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will discuss the economic factors, the oil, the bond yields, etc., and the impact of these factors on the movement of the stock market. Now let's first see 2 contradicting conditions or 2 contradicting situations. Okay, this is oil. So when the ceasefire was announced, then we have seen that oil started to trade below $100 mark. Okay, but here the problem was that even though it was trading below $100, but it never lost the $90 mark. Okay, so it was trading, then based on some news, it moved up again, gained the $100. Okay, but the closings were below $100 mark. Then on Friday 17th of April, when there was some more comments from the president, okay, and some more information, some more good news, we have seen the fall in the oil. And for the first time after almost a month, oil actually breached the $90 mark and made an intraday low at 86.13, but recovered and closed above $90 mark at 91. Since then, okay, it is holding. So we have seen that the oil is holding and closing above the $90 mark. Okay, but that is not a problem. The problem is that when it closes above the $100 mark. Now, the oil started to come down. That was a good news, a relief to the Wall Street, to the stock market. But then when Iran announced that the Strait of Hormuz will remain closed, then we have seen that on Tuesday, 21st of April, oil moved up. On Tuesday, 21st of April, we have seen good fall or profit booking in the S&P 500. However, S&P 500 did not lose the 7,000 psychological mark. Okay. Then oil moved up, and but still on Tuesday it closed below $100 mark at 98.98. Okay. But then from Wednesday onwards, we have seen continuous bullish movement, continuous sustained bullish movement, and all of the hourly and the daily closings were above the $100 mark. Okay. So oil has gained $100 mark. This is a problem. Now, oil is trading and sustaining above the $100 mark, closing above the $100 mark. But at the same time, if you look into Nasdaq, it is moving up. All of the closings every day, it is making a new all-time high. The similar thing is seen in the S&P 500. Okay, it is also moving up. So oil is moving up, sustaining and closing above $100 mark. Stock market is moving up. Indices are moving up. Stocks are moving up. Okay, fine. Now next comes the bond yields. Okay, this is the 10-year bond yield, and the similar thing is seen in the 2 years and the 1 year, and also in the 6 months bond yield. Okay, so what we are seeing here is that when the war started, that time, okay, the 10-year bond yield was around 3.955 approx. Okay, then from that day, from 27th of February from 28th of 2nd of March, we have seen heavy bullish movement in the bond yields. Okay, now we are seeing the heavy bullish movement in the bond yield, then a reversal. At the same time, we have seen this movement. Okay, if you notice this, the date. So when the market was coming down, bond yields, okay, these were moving up. When market started to move up, then bond yields started to come down. Okay, however, if you notice, like percentage wise, okay, the stock market indices have gained heavily, but there was not much change in the bond yields. The yield was still, so the high was 4.46 or 4.465, and then the low was 4.235. Okay, since then it is trading between these two. Now in the recent time, when the oil starts to move up, oil starts to gain and is sustaining above the $100 mark, we have seen that the bond yields are also moving up, and there is the bullishness, okay, in this, the bond yield. Now we are seeing that bond yields are moving up, the oil is moving up, and also the stocks and the stock market and the indices are moving up. Everything is moving up. Now, this is something that I mentioned earlier also, that when the oil moves up, it makes everything costlier. Everything is costly when oil moves up, when oil is trading like more 90, 100, 120 or so, it makes everything costlier. Okay, means it triggers the inflation. Now the bond yield, when the bond yields are up, what does that mean? This means that the market participants, okay, they are expecting the inflation to rise, the interest rates to remain at the highest level for some more time. Some more time means months. Okay, they're not expecting a rate cut, rather they are expecting a pause, okay, or they are expecting a rate hike. So this is what the rise in the bond yield signifies. So when the bond yield was coming down, okay, then it was clear that the market participants they were expecting that there will be a rate cut, okay, there were the favorable conditions and the inflation will go down. But then the war started and everything has changed. Now the problem is that all of these at the same time, the bond yield, the oil, the interest rates, sorry, not the interest rate, but the movement of the market, the indices, all of these at the same times cannot go and remain and trade bullish. Okay, under the normal times, under the normal circumstances, okay, it can, provided that The yields are in their defined range. The oil is in the defined range as it was before the war. Okay, it was trading around 60, maximum it was hitting 70, otherwise it was coming down to 50. Between 50 to 70 it was trading, okay, for last many months or years. Okay, it was in that condition. So as long as the oil or bond yields, they are trading in a defined range and are settled, then there is no problem. Problem happens when they start to move up and gains these significant levels. For example, for oil it is 100. There is no defined thing in the bond, okay, in the yield, but 4% is considered as a good yield. 4% or more is a good bond yield. Now comes the news. This news is primarily related to the oil, okay, but it also includes the options of the S&P 500 SPY and the options of Nasdaq QQQ. So the title was "The Insider Trading Suspicions Looming Over Trump's Presidency," and this article was published in the BBC. Okay, so BBC said that from the very first time, this was 9th of March 2026, and the president said the war is very complete pretty much. So the announcement was made public around 7:15, but millions of dollars of the oil futures contract, okay, were executed around 6:30. And after the news was published, immediately we have seen that the oil came down heavily to around 84 or 86. So these market manipulators have made a lot of money by doing so. So the time here you are seeing 7:30, 6:30, it is in the GMT. Then again a news on 23rd of March 2026. And around 15 minutes before the president posted, okay, there's the comment, we have seen very heavy spike in the oil, okay, and then again hundreds of millions of dollars, and they have made a lot of money. So these are a few examples, but it is happening almost every day or almost every other day. So what does all of this indicates? This indicates that something is going to break in the near term. Okay, what that something will be? So it is very much clear. Either the equity market it will break, the stock market or the indices, okay, these will break, or the oil will break and the bond yields. So this means that there are the combination. This side is the equity market, stock market, etc. This side is the oil and the bond yields. Okay, all of these at the same time simultaneously cannot move up. Something is going to break, and this is going to break very, very soon in the next week, because next week is the full of events, and the stock market will remain heavily volatile in the next week. And next week we will see, or we will get to know what exactly is going to break. However, guys, whatever is going to happen or whatever will happen, I will keep you updated. I will keep you posted through these daily precise updates, which I give to my Patreon community members every day on the daily basis, Monday to Friday, Monday, Tuesday, Wednesday, Thursday, Friday. I give the pre-market analysis 1 or 2 hours before the open of the stock market. Then I give the first update after 1 hour. Then I give the midday update after 3 hours. Then I give the final update at least 2 hours before the closing of the stock market. And in this manner, my Patreon community members are very well aware of what is happening, what is going to happen, what are the support and resistance levels, what are the bullish bearish conditions with the exact numbers, etc. And guys, that's not all, because I also give the opportunities in the premium stocks of the US stock market, top 30 to 40 companies. I give these opportunities, 30 to 50 opportunities, and I explicitly mention, okay, the condition and the numbers, the levels, each and everything. And guys, that's not all, because I also give the midweek update. It is a video technical analysis and is given every Wednesday. And in this video technical analysis, I discuss all of the bullish bearish condition with exact levels, zones, numbers, and what will trigger the fall, what will trigger the rise, each and everything in detail. So guys, whenever you want to join my Patreon community in order to get all of these, the daily precise updates every day from Monday through Friday, then I have given the link in the description of the video and also in the comment section. And guys, follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button that says membership options. And when you click on this button which says membership options, then you will see that there are these 3 levels, level 1, level 2 and level 3. The level 1 is S&P 500 updates. You will get the daily precise updates and the midweek update video technical analysis. Level 2 is S&P 500 updates and opportunities. You will get the daily updates and the midweek update video technical analysis and also the premium opportunities. Level 3 is the premium level. It is S&P 500 updates, opportunities and hacks. So whatever you are going to get in level 1 and level 2, by default you will get here. Other than that, there will be a Zoom video meeting of 2 hours. And in this Zoom video meeting, I will teach you one strategy with very high accuracy, one premium hack with very high accuracy, one premium indicator with very high accuracy. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, and also the midweek update every Wednesday, and also the opportunities in the premium stocks, top 30 40 companies of the US stock market. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market in the coming week, the week of April 27th. Means from April 27th, which is Monday to May 1st, that will be Friday. So now, first thing first, the next week will be heavily volatile. Why it will be heavily volatile? Okay. For that, Wednesday, the FOMC meeting. Okay. So 2 p.m. the FOMC, the minutes of the meeting, the meeting note, the FOMC meeting note will be released, and we will get to know whether there will be a pause, hike or cut. It means the rate cut. Okay. But for now, the market participants, they are saying that there is 99.5% probability that there will be a pause. And most likely, so there will be a pause. The FOMC event on that day, right? Now, on the same day, after market hours, companies like Microsoft, Meta, Google, etc. These are the primes. They are going to release the earnings. The impact of the earnings will be felt on Thursday, means on April 30th. Fine. Then on Thursday morning, PCE inflation data will be released. However, this data will not be considered or may not be considered because just a day before on Wednesday, the the FOMC event is there. And the Feds would have already decided on the rates, etc. So this data will not be considered if this data is negative. Why a negative data will not be considered? For that, we need to know what is happening in the stock market. For now, stock market is neglecting, discarding all negative conditions, all negative news. It is not considering anything that is negative. No matter what that is. Even if the president says something negative, then also stock market, Wall Street is not considering that. Wall Street or the stock market for now is considering only the positive news or the positive aspect. That's it. Nothing negative. No negative is allowed. Right? That is why there are very heavy chances that if the inflation data is negative, means inflation is moving up, then the market will not be or may not be considering this the negative data. There may come some limited fall intraday, but that will be there. However, if there are certain levels and zones, if there is a breach of those levels and the zones, similar to what happened on Thursday when S&P 500 breached the 7102.91, then it came under the sharp selling. And this is something that we knew before that happened, that once there comes a breach, then there will be sharp selling and it will be coming down to the 705x sharply. So a breach of the level or the zones, will trigger that kind of heavy fall. Now, if there comes some bearishness, some bearish sentiments, negative sentiments, then come Thursday. Thursday evening, Thursday after market hours, Apple and Amazon will release the earnings. And I think it is Amazon. Yes, Amazon will release the earnings, and then its impact will be felt heavily on Friday. So in this manner, from Wednesday onwards, Wednesday, Thursday, Friday, there will be very, very heavy volatility. Okay, this also means that if the stock market sustains until Wednesday, then it is waiting for the decision, waiting for these events to happen. Okay, and when these the events happen, then only there will be the reaction. But now that there is a problem, if the earnings of the giants, for example, okay, Nvidia is not there in the picture, let's say Microsoft, okay, let's say that earnings of Microsoft are favorable, okay, then what should happen? In that case, Microsoft should move up, right? And it should then push, because it is the primary index to all of these, not primary index, it is the primary stock to all of these the indices. Then it should push all of these the indices up, S&P 500, Dow Jones and Nasdaq. However, this will not happen. Why this will not happen? Because if you look into the chart of Microsoft, then you will notice that for last many days, approx, I think it's been 10 days or so, okay, 8 to 10 days, Microsoft is also moving up. Almost every day it is moving up. On Thursday, Microsoft, okay, it came down, but on Friday almost 2%, 1.5 or 2% bullish movement. So Microsoft has gained heavily based on this assumption, based on this speculation that the earnings or the results will be better than expected. That is why this thing is already priced in and there is not much room in the bull side. So if the earnings are favorable, then Microsoft can move up like by 1%, 1.5%, 0.5%, that's it. But most likely it will remain in a condition to fall. Okay, that fall may be limited. Well, that's a different thing. Okay, if the earnings of Microsoft are bad or negative, in that case there will be the fall, and when there will be the fall in the Microsoft, then it will impact all of these the indices. Okay. Similarly, the same logic, the same concept is applicable to the other stocks. Okay, in this manner, the next week will be heavily volatile. Now, let's talk about the numbers and zones, etc. Now, in terms of the numbers, what we know is that the Nasdaq has already reached to the calculated resistance zone. Okay, resistance range, not zone, range. It is already trading in that the resistance range, and there is hardly like 0.25%, 0.5% movement allowed in Nasdaq. Okay, means limited bullish movement because it has now hit the wall, right? Similarly, the same condition is there in the S&P 500. It can move up, but a limited bullish movement. Okay, this is something, okay, exactly the same I mentioned in my previous S&P 500 weekly technical analysis, that now there is very limited space in the bull side. That is why we will see either a flat movement or bearish movement, but very limited bullish movement. And we have seen that for 4 days, Monday, Tuesday, Wednesday, Thursday, heavy struggle. Then finally on Friday, okay, with the help of Nvidia and Microsoft, it managed to move up, right? So limited bullish movement is there. Why the limited bullish movement is there? As per my calculations, okay, historically, the calculations I do, I have seen that S&P 500 fails. Okay, and it has always failed, irrespective of like whether there was the World War I, World War II, then before that, even that condition, after that condition, 60, 70, 80, 90 years. Okay, it has always failed in that condition, because that creates a heavy technical resistance zone, resistance range, which S&P 500 has never been able to clear or to breach or to sustain. And how much this bullish movement will be in the bull side? Maximum 1%. Maximum 1%. Okay, within 1%, it should struggle, it should hold, should come down, either come into the consolidation, okay, or the fall. These two conditions, as I've discussed in the beginning of this the video, okay, that either it should consolidate if it doesn't want to go down, or it should come down. Simple, okay, but no heavy bullish movement. If there comes heavy bullish movement, in that case there will be no new ATH, okay, that we can say this number will be ATH, that number will be ATH. No, nothing. In that case, S&P 500 itself will make a history. So historically, it has never managed to breach or sustain or to close above, okay, these levels, these are resistances. And this is very similar to when recently in 2025 S&P 500 made an all-time high at 6147. Okay, when it was in the 6000, it made an all-time high at 6147. Okay, and I predicted this 6147 that this will be the all-time high based on the same conditions, because historically it has always failed. Okay, but now I'm giving you a range. Okay, why the range and not a fixed number? So for that, we need to understand this heavy, sharp, unidirectional bullish movement. It was purely heavily manipulated. Okay, and we all know, okay, this thing, it was like this. That is why if the market, if the stock market, if the indices are still manipulated, okay, in that case there will be some chances that it can breach that level. Okay, however, we know that irrespective of anything, even if it breaches, then also it will come down. Okay, and even if it want to move up heavily, then also it will come down first, and then only it will move up to cancel the bearish, the historical bearish condition, right? That is why we are keeping this range. This range is maximum 1%, maximum. And for the Nasdaq, this range is already the Nasdaq has already started. It is trading within this range. Okay, and it doesn't have much room in the bull side. This now coincides with the S&P 500 movement of the S&P 500, and also with the saturation and the overbought conditions. Okay, surprisingly, the overbought condition is in the Dow Jones. Means the overbought condition in the Dow Jones is much heavier as compared to the Nasdaq and the S&P 500. Also, if on Monday S&P 500 moves up, Nasdaq moves up, okay, then on the weekly chart it will hit the saturation K equal to 100. Okay, so I will confirm this in the pre-market analysis on Monday. Okay, but still it will confirm, means I will confirm whether there is a K equal to 100, because if that happens, in that case this again means a very limited bullish side movement is allowed, very limited. Okay, and then it will have to go down, it will have to come down, okay, to form a red candle. This condition must be there, okay, until Friday. If not, then in between, like before Friday, it can move up or can do whatever it want to do, but by Friday it must come down, okay, and must close below 27,303.67. So now what does this mean? Means in the bull side, okay, what can be expect in the S&P 500? So guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So S&P 500 closed at 7165.07. High was 7168.59. Okay. Next comes the 7200. This is the psychological mark. 7100, 7000. These all are the psychological mark. Okay. So next comes the 7200 psychological mark. From this closing to the 7200 is like what? 7200 is 0.4 or 0.5%. Okay. 0.5%. This falls within the 1% range, okay, that I've discussed, right? Even a little into the 7200, okay, like 7210, 7220, okay, that much will be like what? 0.6%, 0.65%, etc. Okay, this means that yes, S&P 500 has the potential and has the room in the bull side, okay, to what? To 7200, okay, or around 7200. And as per the historical movement and as per the calculation, standard calculations, okay, it should not move up heavily, it should not move up much. Okay, what if S&P 500 do not follow anything? Okay, just like in the recent times we have seen that the stock market has not followed anything and it was in the straight line, straight up. Okay, kind of like you can say like this, the straight line. In that case, what will happen? In that case, this will happen. Okay, a counter reaction, a counter movement will happen. There will be some good fall, and that will be the profit booking, right? That will be the profit booking. But the most important part is that if the S&P 500 do not follow in last 100 years of history, okay, or even more than that, 150 years of history, S&P 500 has always followed. But if it does not follow, if it do not follow, okay, that in that case there is no known calculated or technical condition through which we can measure, we can predict the high or so. In that case, S&P 500 can move up sharply with, okay, in a single line. Like Nasdaq will be there, it will be moving up, up, and there will be no stopping, only buying, no selling, okay, in a very sharp straight line. Okay, now this thing is impossible to happen. This thing cannot happen. Okay, whatever has happened so far, okay, this was because of very extremely heavy manipulation. Otherwise, technically this is impossible. This cannot happen. Okay, what can happen then? A bullish movement like moves up, down, moves up, down, moves up, down, moves up, down. Okay, this kind of bullish movement is allowed and perfectly sustainable, right? That is so this is why I am saying a sharp bullish movement, okay, this was heavily manipulated. That is why there will be heavily manipulation. And how can the market be manipulated? Again, for that, market manipulators needs the comments, the posts from the president. The president has to speak, and the good thing is that the president speaks every day. Okay, so when the president says that the war is over, Iran has accepted all of the terms, okay, Strait of Hormuz is open, or will be over, war is ended, okay, war has ended, etc, etc. Okay, even though none of this is true in the real world, but the market manipulators, they will get their reason, they will get their bullish boost, okay, and they can push and push. Okay, this is exactly what the BBC, okay, and the other news website channels, okay, they have published about the market manipulation, okay, in the broad daylight, the heavy market manipulation, right? So this will be the condition in the bull side. What will be the condition in the bearish side? Well, bearish side condition is very simple. We will simply go for the 7,000. This is the 7,000 psychological mark. Okay, there will not be any fall until, fall, whatever fall will be there will be limited to the 7,000 range. As long as the fall is limited to the 7,000 range, okay, like 7001, okay, 7000.01, okay, as long as 7,000 is defended and it is not breached, whatever fall there will be, that will be seen as the profit booking condition. The profit booking is happening just like what we have seen on Tuesday 21st of April and on Thursday 23rd of April. That will be the profit booking only. That's it, right? But there will be one more thing here, because there is a fall and the S&P 500 is not losing the 7,000, so there will be again buying and it will move up. Okay, why this buying will be supported? Because the indices are heavily bullish, not heavily, but absolute bullish, 100% bullish on the weekly chart and on the daily chart. The long term and the short term trend is bullish, even though there is saturation, overbought condition, etc, etc, but the trend is bullish. That is why whenever there is a fall, the profit booking or whatever it is not losing the 7,000, okay, not fulfilling the bearish conditions at the 7,000. That fall will be seen as an opportunity to go bullish, because that will then trigger the bullishness. Okay, see what happened on this day, on Thursday 23rd of April. Because on Thursday, first it moved up, breached the previous all-time high made on 17th of April, then fall, then there was very heavy fall. Okay, when the fall was sustaining, then immediately in the next hour there was very heavy sharp bullish movement and closed above 7,100. Okay, so this was a case of pure manipulation. Okay, because this kind of very heavy swing, up, down, up, hold, close. Okay, this heavy swing just like up, hour after hour. Okay, technically, okay, this is not possible. And if you have the knowledge of the stock market, okay, then you will see that this technically, okay, this thing never happens. If it has come down, then there will be limited bullishness and then it will sustain, okay, around this the fall. If it has moved up, then there will be limited bearishness, then it will sustain in the bull side. Okay, not like it has moved up, then come down, then heavily moved up, then come down. Okay, these heavy swings happens when there is manipulation. Otherwise, it is not possible. Technically, it is not possible. That is why I am saying that when there is the condition of the profit booking, okay, and this is the 7,000 mark, okay, When there is a condition of the profit booking, then S&P 500 at first, it must come down and must sustain. Okay, should not be like Thursday. Okay, sharp up and down. If it has come down, then it must sustain so that it can give an opportunity to enter. Okay, not like it has come down and then in next 5 minutes it is moving up. Okay, and has recovered all of these losses. Okay, not like that. And when it sustains here, okay, and there is next day also there is similar kind of movement, then it gives an opportunity to buy and to follow that trend, and that trend is bullish. Okay, otherwise not. Now, what happens if it fails to sustain? Okay, one more thing, the case of consolidation. The case of consolidation, okay, it is allowed up to 7,000, okay, and in the maximum side we can say like 7,200. Okay, 7,100 will be the tiebreaker. There is a level in the 7,100 that will be the tiebreaker, not the 7,100. Okay, 7,000 psychological mark. Okay, this will be considered. Bull side 7,200 or whatever will be the all-time high, that will be considered. Okay, this will be the consolidation zone, and then there will be up down up down up down up down movement here. Now, consolidation means the most probable days for consolidation are Monday, Tuesday and Wednesday before 2 p.m. Eastern time. Why? Because there is like no earnings, okay, no data, etc. on Monday, Tuesday and Wednesday before 2 p.m. Eastern time. Okay, so on these 2 days the S&P 500 can consolidate. It can come down, hold, come down, hold, or can move up and then come down, hold. Okay, it can consolidate. But Wednesday after 2 p.m. Eastern time, it will come into the motion. Okay, now then either it will have to move up or it will have to go down. Means either bullish or bearish, but not consolidation. The condition for the consolidation will be exceptional. It will be very, very exceptional. Okay, so that I will discuss if that kind of condition is seen. But this is the consolidation condition. Consolidation means that the stock market has gained heavily. Okay, and it is now overbought. Okay, very heavy, and is expected to come down. Okay, under its own weight, it is expected to come down. But the market movers, the market manipulators, they do not want to push the market down. They are not looking for any bearish movement as of now. So they will then not trade heavily. They will not let it go down, or they will not let it move up. Rather, they will then force to enter the index or the stock to consolidate. This consolidation, okay, it can last from like 1 week to 4 weeks to 2 months, 3 months, depends. Okay, but in the indices, okay, it is maximum, it can last for 1 month, around 1 month. That is the maximum time. In stocks, okay, this can happen for 2 months, 3 months, 6 months. Okay, you will see that the stock is range bound and has not given any good bullish or bearish movement for last many months. Okay, or sometimes, okay, for the entire year, right? This will be the consolidation phase. Now comes the bearish movement, the bearish side. Again, for the bearishness to happen, the S&P 500 will have to lose the 7,000. At first, there must come a breach. Okay, must come a breach. I'm not saying that it must close below, it must lose. Okay, I'm simply saying that there must come a breach of the 7,000 psychological mark. Once there comes a breach of 7,000 psychological mark, then this will indicate that now the market is going to fulfill its pending obligations to the levels in the 6,900, 6,800, 6,700 range. Okay. However, this fall will be tricky because for the fall to continue, first of all, if there comes a breach, before the breach, if there is any confusion, and after the confusion there is a breach, then exactly the same thing that has happened on Thursday 23rd of April. Same thing what? Exactly this is the same thing. Once 7,000 is lost, then S&P 500 will come under sharp selling condition. There will be sharp selling once it loses the 7,000 psychological mark. Now, once the S&P 500 loses the 7,000, then what will happen next? Then we need to see if the Nasdaq has lost the previous all-time high level or not. Okay, previous all-time high was 26,182, 26,182. Okay, if it has already lost this the mark, okay, then fine. Then we will see if the Nasdaq has lost or has breached what? It has breached the low of this candle, the candle that formed on 14th of April. The low of the candle formed on 14th of April. The low was 25,514.55. Okay, because even if the S&P 500 has breached and has lost the 7,000, okay, but the Nasdaq is sustaining above and the Nasdaq has not breached the 25,514.55. In that case, there will not be any good fall in the S&P 500. The fall will remain within the 6,900. Okay, even in the first half, second half of the means above the 6,950. Okay, 6,950 will be the median. Okay, so it will remain in between 6,950 and 6,000 and the 7,000. Okay, or even in the worst case, it will remain within the 6,900 range, because for the heavy fall to happen, Nasdaq must breach, must lose the 25,514.55, so that the entire market, the Dow Jones, the S&P 500 can come under pressure and to give more or the heavy fall, right? And the S&P 500 can enter into the 6,800 to fulfill its pending obligation. Okay, there are levels here. Okay, in the 6,900, the level is in the 695x. Okay, it is not the 6,950, it is the 695x. Okay, after that it is 691x. Then in the 6,800, this is 685x. Okay, the obligation is still pending. Okay, and these are also the heavy support levels. They will hold the fall. Question is that if there will be this much of heavy selling, okay, what will then happen to the trend? Will the market be in a condition to buy, okay, or not? Means whether it will change the trend or not. For that, it is clear market is not going to change the trend. Okay, the long-term trend is bullish, even the short-term trend is bullish. Okay, if the fall is intraday heavy, in that case absolutely no change in the trend. If the fall is for 2 days, then also most likely no change in the trend. If the fall is for 3 or more than 3 days, then yes, the short-term trend, okay, it will be changing. It has not changed, it is now neutral, but it is changing, right? Means this fall, okay, will be seen as an opportunity. Okay, this fall will be seen as a bullish opportunity and not the bearish opportunity. Okay, bearish opportunity will happen only when there is bearishness, and only when the MACD on the weekly chart of the S&P 500, what? MACD on the weekly chart of the S&P 500 has turned bearish. In that case, the fall will continue. In that case, the short term and the long term trend will change. Okay, short term trend, okay, it will change within 4 to 5 days. The long term trend, okay, that will change in like 2 to 3 weeks. Okay, it will take that much of time. Okay, this means that now 7,100, actually my level in the 7,100, not the 7,100, then the 7,200. Below this, the fall. This fall depends on whether the Nasdaq has breached the 25,514.55 or not. Simple, very, very simple. Okay, otherwise fall will be limited and there will be recovery. And yes, this is also an indication if the Nasdaq has not breached and has not lost 25,514.55 and still there is heavy fall, then that fall will be a bullish opportunity. That fall will be a bullish opportunity because Nasdaq has not lost and has not breached the 25,514.55. This means that more or heavy fall in the entire US stock market is not allowed. Simple. So on Monday in the pre-market analysis, I will mention about the K equal to 100 if the saturation is there, because if saturation is there, okay, in that case we will expect the pressure on the market. Okay, and most likely, highly likely, the S&P 500 will follow its history. And also I will share the exact number and the range, okay, where we can expect the S&P 500 to stuck, okay, and then to come down. And other than that, on Wednesday, 2 p.m. Eastern time, then 2:30 p.m. Eastern time, the press conference, okay, things will be more clear. Then heavy volatility because earnings after hours Wednesday, then similarly after our Thursday. But then by Friday, the earning season will be over. Okay, earning season will be over. Whatever has to happen would have happened, okay, by Friday, by May 1st. Okay, and then the stock market again will follow the Middle East, the president, okay, the technicals and the data. That's it. So guys, I hope the bullish, bearish, all of these the conditions are clear. So hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates every day from Monday through Friday, and also the opportunities in the premium stocks and the midweek update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And other than that guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.